Crypto Kids, welcome back to another video. Today we're going to be jumping into the price of Bitcoin, and I know every single one of you are wondering if this bullish pennant can break towards new all-time highs, or will this be a fake out for Bitcoin? And let me tell you this, I have a couple of very bullish news for you. On top of that, towards the ending of this video, we're going to be going into some economic indicators. And if you just stay for that and that only, you'll have a huge edge in the market because no crypto YouTuber is talking about it at all. And on top of that, we're going to be looking at it from the Bloomberg terminal. So stay tuned for that. And on top of this as well, there's some incredible news regarding Bitcoin ETFs. This is not the one. This is looking at the macroeconomic data. So in summary, you want to stay tuned. You want to leave a like on this video. Subscribe if you're already not a part of the Crypto Kids community, and turn on the notification bell for time-sensitive videos. But with that said, let's jump immediately into the short-term time frame for Bitcoin, and then we'll move on from that place. So looking at the 4-hourly time frame, Bitcoin has over the weekend not had too much volatility because after the spot ETFs, Bitcoin lost the volume that it usually had over the weekends, and we skyrocketed to 72.7K for Bitcoin. Now we're retesting this super important level at 71.4K. Because if we go back in price history, you can see that Bitcoin created this double top by retesting the 71.4K then resistance. And if we go back 4 weeks ago when Bitcoin created its all-time high, we found support at 71.4K, and then we hit the $73,700 price level. And after retesting it, Bitcoin dumped towards 60K. In summary, this level is super important for Bitcoin, and if we manage to close the next candle, retesting then has a move towards the upside, this is personally going to make me super bullish. And I know we've all been talking about the bullish pennant for Bitcoin and what's been happening. Now, if you're in the Telegram community, I mentioned that Bitcoin, I've added more to my Bitcoin long positions that I've opened at 43K. And I've entered that exactly at 71.9, so I added margin to it. And if you're looking to open a long position or wondering whether if Bitcoin can continue breaking higher, then this is what I will say. So statistically speaking, in terms of a bullish pennant, the bullish pennant is usually broken 50 to 75% into the actual trading pattern itself. Now, if we have decreasing volume, which is what we have, and if the price breaks out of this bullish pennant, going 75% into the pattern itself, that is a super strong indication that in a bull market, which is also something that we're in, this pattern can continue leading towards the upside. But from my experiences with bullish pennants, they either tend to fake us out or they at least come down to retest. The reason why I added at 71.9 is because number one, I already have a profitable position, so it doesn't really matter if I added at 71.7 or 71.9, so I did it there anyways. And sometimes these bullish pennants, they break out straight vertically and there's no stopping it, so I took that risk. But if you're looking for a potential re-entry, and this is only my analysis only, please come to your own conclusions before trading or investing. I would look either at a potential retest, but because we came down to 71.4, and if we keep holding it in the upcoming hours, that could be a bullish signal. So you could be looking in re-entering either right now or maybe if we dump back down to 71.4. And in terms of a take profit and stop loss, we have a Fibonacci extension at approximately $89,000. So I would put it there for now, but if Bitcoin pumps higher, then I think that take profit can be adjusted. And in terms of a stop loss, I would personally keep this pretty tight, perhaps at 67.8. And with leverage, I wouldn't go too crazy, but that's completely up to you. It's your risk management. It's because we have a 26% win and a 3.85% stop loss, so you probably want to not use too much leverage. But again, it's completely up to you. We know that Bitcoin has a CME gap at 68.2, but historically speaking, Bitcoin can fill the CME gap within even 2 months, right? But eventually, I do think that the CME gap will be closed. That could be within 2 months. That could be within 3 months when Bitcoin goes to 90K and then dumps back down to 68K. So I wouldn't be relying on this, primarily. And the final thing is this chart that I discovered today, thanks to Sammy Loyal. This chart, don't look at the y-axis. Guess what it represents? It looks like a completely terrible, it looks like a terrible altcoin going to zero. And the trend here is clearly bearish. Like we can see that the trend is clearly bearish, and this is just going to hit zero at one particular time. But take a guess, leave in the comment section down below what you think this chart is. And it's a secret chart that you cannot find on TradingView. Well, let me tell you, you probably already figured it out. It's just the Bitcoin price inverted. So it's Bitcoin in Bizarro world. Now, if you want to access this chart, you need to type this particularly into TradingView, and then you click enter. It doesn't show up. And what we can see here is we can see a comparison between 2020 and what's going on in the markets currently. Now, in 2020, Bitcoin had a significant drop towards the downside. We had a couple of reversal candles. We had a doji candle. And after we broke below the all-time low that it created at 20K, Bitcoin just went and created a new all-time high at $59,000 or $65,000. And I think it's very similar to what's happening right now. So if Bitcoin is able to break past 73.7K, then I think Bitcoin will go to those $90,000 levels. It's all going to be dependent on how Bitcoin reacts to the prior all-time high. But if it breaks it, I think 90K, new parabolic all-time highs is very much possible. And I think what's happening right now is super similar to what's happening back, or what happened back in 2020. Ladies and gentlemen, that concludes our technical analysis for Bitcoin. Now we can jump into the breaking crypto news. And trust me, it is super important. So let's jump into that. Let me just change the tabs. There we go. So we can see that a $284 billion China Southern Fund has reportedly applied to launch a spot Bitcoin ETF via Hong Kong. Now, why is this important? If you recall, in previous videos, we discussed the importance of Hong Kong ETFs for Bitcoin. Why? Because Hong Kong represents basically all of the capital in Asia. All of the capital in Asia either flow through Hong Kong or Singapore. And us getting ETFs in Hong Kong will allow us to get hundreds of billions of dollars, if not trillions of dollars worth of exposure into these Bitcoin spot ETFs, which are currently only available in Europe and in the US. Currently, this news is not moving the markets much, but trust me, after they're launched and we see incredible inflows into them, I think it will push the price pretty heavily and everybody will be shocked. So that's the first very important piece of information. Now, over the weekend, or not over the weekend, last week Friday, I posted an interview with James Seyfarth, which is the legend he is. And if you want to watch that interview, I definitely recommend going to it. After this one, I'll put a card at the top right-hand section. We discussed the Bitcoin ETFs and the Ethereum spot ETFs. So what we saw last week was pretty good inflow numbers for the Bitcoin spot ETFs. The only thing that worried me is the $200 million in GBTC shares, because James, he mentioned that most likely from now on, we'll probably stick below $100 million. Now, that wasn't the case on Friday, but we may well see that from today onwards, it's below $100 million, because according to him, all of these huge institutions like Gemini, Genesis, and FTX, they've all liquidated their GBTC holdings. And us falling below $100 million worth of outflows would be super bullish, because we're only 10 days away from the Bitcoin halving. And once we have the halving event, and the number of new Bitcoins released into the supply decreased from 900 to 450 Bitcoins, then we will only need to accumulate 450 Bitcoins to, in theory, keep the price of Bitcoin at high levels. But do keep in mind, if we go into previous cycles for Bitcoin, when we do have the halving event, the day before, the day after, and on the day, there's usually no volatility whatsoever. So do expect that to happen when we hit the halving day. And finally, in terms of market data, we can see that once Bitcoin surpassed $72,000, we liquidated $2.2 billion worth of positions. And if Bitcoin hits 74K, then we will liquidate another $2 billion in positions. And knowing Bitcoin, it tends to trigger that liquidity. So don't be surprised if we get a huge wick crossing above prior all-time highs. And that's pretty much, actually no, we also have Morgan Stanley, which is the biggest private equity fund in the world that has $1.5 trillion worth of assets under management. And they are going to be offering Bitcoin ETFs to any client, which is different compared to the current ones that we have. There's a lot of complexion. I'm not going to get into it, but just know that this is incredibly bullish. So in the fundamental side of things, in the on-chain side of things, in the everything side of things, Bitcoin is looking not too shabby. Now let's jump into the macroeconomic indicators. And for this, I'm going to have to switch to this Brave tab. Now, this is crazy. Last week, we saw 303,000 different jobs added in the month of March. However, if you dig further into the data, all of the job gains came from part-time jobs, according to Zero Hedge. So 691,000 part-time jobs were added whilst we lost 6,000 full-time jobs. And the worst part is, over the last year, the number of full-time jobs is down 1.35 million, while the number of part-time jobs is up 1.88 million. What is happening here? Now, you're probably asking, okay, why is this important? It's important because if we switch to the Bloomberg terminal, you can see that the red line represents this non-farm employment data that has been skyrocketing. And that's good, right? That's good for the economy. But the issue is, this employment data is made up of different things. And these things include full-time employees, it includes part-time employees, and it also includes people that have taken up more than 2 jobs. And you can see here that the green line, which represents people that have taken up more than 2 jobs, has skyrocketed to almost all-time highs. Now, why would any individual take up 2 jobs? The simple answer is because one job doesn't give them enough monetary value to sustain their lives. And that is incredibly concerning, ladies and gentlemen. If we switch back into the Brave browser, we can see that the number of people with multiple jobs jumped again in March. But remember that this figure only increases when someone gets a second job. If you're already working 2 gigs and you pick up a third job, you're not counted again. This is where it gets interesting, at least not here, but you are counted again in the non-farm payrolls, which is the employment data. And that's how corrupt the current financial economic data is. I mean, if we look at the total food inflation that everybody spends on a daily basis, we can see cocoa up 345%. God's sake, eggs are up 40%, mayonnaise is up 50%, beef is up 51%. This is since 2019. And if we see the actual US food inflation data that is published, it represents 25.2% over the past 4 years. But the truth is, it's up 36.5%. Now, how does this happen? Well, the government can pick and choose which foods or which goods and which services represent particular data points. And that's why it's super corrupt. And it's the unfortunate thing. We're expecting interest rates to, because of the employment, we're expecting interest rates to keep on going at a high level. And that will cause more smaller banks to be in stress. And if they go down, then we know that this is a positive impact for Bitcoin. So even though that the economy is not good at all, we know that if smaller regional banks get into trouble, the price of Bitcoin tends to pump towards the upside. But guys and girls, I hope you enjoyed that. From now on, I will always have a macroeconomics session in every video. But ladies and gents, I will be seeing you all very soon on the next video. God, I'm out of breath. Take care, everyone, and bye-bye.